Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 30th of January. All right, as we come into Wednesday's trading now, this is the real start of the week. Now, Monday, the market reconnects. Tuesday, there's a few, bits and pieces, a bit of news coming out here and there, and it gives the time market to sort of settle down. So what we've got is we're starting to see the currency sort of settle down a bit. Now, they aren't exactly reacting to the US numbers, and I'll show you the US consumer confidence numbers, a little bit weaker than expected, but we are starting to see a bit of activity now. Of course, Tuesday was all about sterling. We had that UK, it was like Plan B, it was a second vote. UK Parliament has sort of knocked back the Brexit setup as it is, particularly the Irish Northern Ireland border. So that situation is a bit of a negative, sort of points towards a potential no deal. The EU keeps coming back saying we're not going to adjust anything, but the UK are going back to them saying, well, adjust these things. So I think it's too big for the EU to mess it up as well. I think we will get a deal, but short term, yeah, sure, sterling's down. But overall, if you look on the big scheme of things, it's still going up at this stage. Now, so Kiwi, after Friday's move, sort of starting to trade sideways. Dollar yen is just trading sideways, just straight through the support line there, no big deal. Same with euro. Okay, there's nothing really out on the eurozone. Of course, I've already done sterling and dollar CAD. It's pulled between oil, which has been whipping about but rallied today, and weak Canadian fundamentals. So what you end up getting is this choppy trading activity. But overall, in the big scheme of things, it's just trading sideways. So from here, all I'm going to be doing like today is actually just adjusting my trend line. So the Aussie there, what I need to do is I need to go fishing to find out where that support line is now. We've got that big glitch on the 2nd of January, but that's all we've got at this stage. So I'm just going to draw that trend line in there. It gives me a bit of a look at exactly where the Aussie is. Now, that's going to be important because today we have the Aussie CPI numbers. Now, these numbers come out quarterly, and they are extremely high impacting. So this gives us a chance to really get something happening. I still think it's only a short-term trading opportunity unless there's massive variance, and that'll revolve around, and that's primarily because we still haven't got the US picture. And don't forget, we do have the FOMC later today as well. Now, with the Kiwi, okay, if I look at the big picture here, we've got a top and the bottom, but we do have a support line developing here on the downside. So to me, it's just a simple case of drawing the trend lines, find out where the levels are. Unfortunately, once again, we don't have specific direction. So if you don't have direction, you've got trend lines, but we need the piece of the puzzle. We need the fundamentals to give us direction, whether it's going up or down. So to me, it looks like there's potentially a chance for sort of range-bound activity at this point. The Aussie will determine where the Kiwi goes today. Now, this trend line here, if anything, I'm just going to change it to blue. It's gone back down. So to me, I change the color. If a trend line's broken, I just change it to another color screen so I can see where it broke instead of just coming over here today and putting it on the low, because that'll only have 2 touches, where this other trend line had a lot more history. Euro, well, it's in the middle of no man's land, right? So when I'm looking at the resistance line here, I've got the real resistance up here. Now, if I was to move this trend line just to the current market, well, all you're doing is focusing on that high. Right? It's only got 2 touches. It's not that valid. So to me, I'm just going to leave that trend line there. If anything, same as the dollar yen, I'll just change the trend line. So I know I know where it was, but it doesn't really make a huge amount of impact to me at this stage. Sterling, well, what we can do is we can probably come back across. This is a recent high, so I need to probably go back to the daily charts. What I'm trying to do is find that high. Because sterling's just dropped 150 points or 140 points from the high, you can potentially start to draw in the new resistance level where it's going to be. So if I bring that back to the hourlies, just tune it up. The hourly and daily highs may have been different. So let's have a look at that. So you've got the trend line there. It gives us a bit of a focus. Because there's no other levels on the top side until it gets to 134, I just want to know where that is. So I'll just blow sterling up. And dollar CAD, well, it's pretty much the same as before, as these other pairs. I've got a previous line here. I'll show you just where I'm changing the colors. And that's pretty much the setup with dollar CAD now. Dollar CAD's getting pulled all over the place. It's whipping about on the so-called global growth or no growth, just if equity markets are up or down. And it's just sort of trading sideways. As you can see on this picture, this is a good one where you can see, overall, it's just trading sideways within these most recent ranges. So don't get overly excited just yet on dollar CAD. We need a bit more information about what's going on. Usually the FOMC would be put all of the major currency pairs on high alert. Today, because of the data, I think we're just going to be watching the press conference more so than anything else. All right, now just having a quick look at the US dollar index, okay? And just, you can see that short-term move down, obviously on sterling, but you come back to look at the dollar index itself, no major impact from that sterling move, okay? It was already off from Friday after Trump did his tap dance on the US government, so that's just trading sideways. So the US dollar still, to me, is completely like neutral. It's just floating around on the fortunes of either euro, sterling, or anything else. And dollar China, I tell you what, this is a tough cookie to crack. I can't really work out what's going on. And that's because in the news, the US-Chinese trade issue, it is starting to look a little bit cloudy. Okay, there's all sorts of situations with the major telco. I won't even try and pronounce it. I keep messing that up. But, there's that could create a huge amount of tension with China. To me, dollar China's got to go to the top side. And that's where, because China's going to get impacted by these tariffs one way or another. Now, when you look at, I'll just show you the news in a second, but check out the US equities, pretty flat, right? Some like Dow up 0.2, S&P down 0.1. So there's no real direction or the story about global growth or global growth dropping, which has been hitting the headlines where the news services has just been regurgitating stuff. Well, this isn't really coming into play for them, so I can't really write that today because it's actually flat. And then if you come across to, let me just give you a look at the news, and this is where you can sort of piece a few things together and try and work out basically what's news and what's general make-believe. Well, pound falls, a no-deal Brexit. Yeah, that's actually true. Obviously, they want to go back to the EU and try and get a change in some of the stuff. It's almost like they had the opportunity to do this so many times, but the EU is saying, get stuffed. Okay, you should have done this before, but we'll see how that pans out. If the EU do come back and modify something, then I expect sterling will rally a couple of hundred points, that's for sure. Now, the rest of all these news things, there's the cryptocurrencies, how are they going for you? Most of the news is all about the Fed. Okay, we're looking for the Fed to do this, that, etc., etc. And that's where we are with all these other bits and pieces. Apple services business growth. Okay, Apple's saying, China's going to be okay and all this sort of stuff. Yeah, that's just because they've got their business there. I wouldn't be getting too caught up in that. So as you can see from these news, there's no clear, specific details about what's happening with the Fed. The sterling Brexit is still up in the air as well, and that's going to really cause a bit more confusion and chaos in the general markets. And then what it does is it gets traders sitting on the sidelines. So if I just come back to the MyFX Trading Hub, I've just tweaked this for today. We are going to be making a few updates to the MyFX Trading Hub, but just so it's easy to coordinate. Today's market conditions, well, we've got geopolitics dominating. Oops. And then that's where the major sort of theme is. Okay, so, we've got the US-China trade issue. We've also got, obviously, Brexit. And there's, still that pretend US government shutdown situation. So I don't even know how that's going to play out. Now, with the sterling, it's gone from a sort of like a strong bullish to still bullish, but mildly bullish. On the daily and weekly charts, it's still going up. Of course, we've had a little bit of a breakdown on the hourlies, but it still looks like it's going up. Now, what you want to be doing is you've got the major pair currency outlook, right? So you're looking for the pairs that do have direction and then trying to match up the upcoming releases where we could get specific momentum on these pairs. So for sterling, if we had a sterling release and it came out strong, you'd probably be very happy to get long. Now, when it comes down to these other pairs, what we're looking at is, you're looking at the major releases today, the Aussie CPI numbers, right? Well, we don't have really specific direction on the Aussie nor on the US dollar. So it makes it a little bit tricky. It's just, basically, this is an opportunity to trade the numbers. If they're weak or strong, we should get some sort of reaction. It will depend on the level of variance in the data, okay? But don't expect a huge amount of long-term activity. Traders are jumping in and getting out because they don't know what's going on with the US dollar. And more importantly, because down the bottom here is the biggest event in the financial markets, the Fed funds interest rate and statement, right? Then we have half an hour after that, we have the Fed FOMC press conference. So these are two things. Now, we know the Fed doesn't have any of the economic numbers since December, mid to end of December. So they've got nothing to look at to judge policy. So they won't be doing anything. If anything, as I said, they may be cautious about how stupid the US government is, right? And what impact that's going to have on growth, etc. So we have to wait to see how that plays out. And that'll probably keep traders from getting too caught up in a long-term Aussie position, regardless if the Aussie CPI is really strong or weak. Now, just on the back of that, just have a look at these. This is one of the good adjustments with the calendar. Now, we've got two releases coming out in Europe, which are highlighted as blue, okay, or they've been tagged as blue. These data releases that are blue, the trading rules do not apply to these currency pairs, or these releases, I should say. So don't worry about squaring up ahead of these releases. What we're trying to do is highlight potential market-moving events. Now, the Swiss data very rarely does it impact, but the COF economic barometer, it's like overall economic sentiment and confidence in Switzerland. Now, if this number is hugely variant, it will impact, okay? As I said, there's not a lot of data comes out of Switzerland that really gets things moving, but this is potentially one. Now, you don't have to be square, as I said. Also, the German GfK consumer sentiment numbers. There's the prelim German CPI numbers, but they come out over the course of the day as all the different areas in Germany give their CPI. So it's a bit of a hard one to sort of follow. The GfK consumer sentiment, this, once again, it's like the sentiment numbers that have been impacting, say, Australia, New Zealand, and generally everywhere. If there's huge variance in those, then you could see a release. Then could see a big move in euro. Okay, so once again, all the data releases ahead of the FOMC, traders will be squaring up all the major pairs ahead of these guys here. Okay, because that's where the potential impact is going to come from the US dollar. As it is, the US dollar is neutral at this stage. Usually we're waiting for the Fed to give us direction, up or down. I think it's going to be sideways, but don't pre-guess that. Check out the opportunity and see what comes about. All right, that's it from me, guys. Not a hell of a lot to really sort of sink your teeth into, I know. Don't forget, we are changing over to the new 247 trade zone on Friday. Don't forget, you can obviously go in there, register, get yourself organised, work out how this thing works. It's going to be a great way to work out how to follow the market, ask questions, technicals, fundamentals, capital management, etc. We think it's going to be a great resource for all traders to, to just keep on up to date with what's going on. All right, guys, that's it from me. Hopefully, to me, the Asian session is looking very sparkly with the Aussie CPI. It's well worth a look. And just on that, before you go, if I can just switch back to Zenith, just be aware with these numbers, right? The where are we? Oh, just scroll back up. Now, about a year or 2 years ago, the RBA decided to start having their own numbers like a lot of central banks. So the core market reacts to the quarter-on-quarter numbers, but just keep an eye on the these other two ponies, the RBA weighted medium and the trim mean. They can also impact. So what you're looking for is, say the CPI quarter-on-quarter numbers 0.4 or stronger or weaker. You want the quarter-on-quarter numbers for the RBA to be either stronger or weaker, the same as this number here. All right, that's where you're going to get the real follow-through. Okay, guys, that's it from me. It's all about waiting for the Fed, and hopefully they've got something for us. I'm not holding my breath. All right, cheers, guys. Have a good one. I'll see you in the 247 trade zone. All the very best. Cheerio.